Brent crude is locked at $88.50 with a 35% probability of a Strait of Hormuz supply shock. One invalidation level could trigger a $2 freefall or send us to $92. Fast. The technicals are screaming bull flag, but liquidity grabs above $89.20 could wreck late longs. Right now, Brent crude is sitting at $88.85 and it just flashed a pattern that has trapped both bulls and bears in the last two sessions. Most retail traders are looking at the geopolitical headlines and assuming the breakout has already happened. That is the trap. There is one danger zone and one hidden opportunity right now. I'll show you both. If you are watching this without sound, the number you need to see on screen is 88.50 and the phrase is liquidation trap. Stay to the end. I'm giving you 2 scalp plays and 1 swing trade you can execute today, plus the one headline that flips everything. Here is your instant market verdict. The session bias is bullish but consolidating inside a high volatility range. On the daily chart we have a strong buy signal, confirmed by the 4-hour and 1-hour trends all pointing higher. The moving averages are stacked in our favor, the 5-day moving average at 87.17, the 10-day at 84.10, the 20-day at 82.55, all sloping up and acting as a conveyor belt of support. The price is comfortably above the 50-day at 85.87 and the 100-day at 86.23. This is a breakout structure that is breathing. However, here is the single invalidation level that flips everything, $87.50. Write this number down. If we break 87.50 today with a 4-hour close below it, the entire bullish structure resets and a liquidation cascade toward 86, maybe 85.50, opens up. Right now the herd is heavily positioned short, with stop clusters building above the round number of $89. That sets up a classic stop hunt scenario where the market could spike into that liquidity pocket before a violent reversal. I just pulled fresh data from Trading Economics. Tanker traffic through the Strait of Hormuz has collapsed by roughly 40% in the last 48 hours. That statistic alone is injecting a 35% geopolitical risk premium into every barrel. When physical flow drops like that, algorithms front-run headlines. That's why the dip buyers keep stepping in at 88. Let's go deeper into the technicals. Pull up the daily Brent chart. You will see a clean series of higher lows since the spike off the 82 zone. The RSI is at 61.55, not overbought, leaving room for an extension. Stochastics are elevated at 77, but in a trending market they can stay in overbought territory for days. The MACD histogram is positive at 0.45, and the signal line is still curling up, which tells us momentum is intact but decelerating slightly. That deceleration forms a hidden bullish divergence on the 4-hour chart. Price made a higher low near 87.20, while the MACD made a lower low. Here is what most traders miss. Hidden divergence in an uptrend is not a reversal signal. It is a continuation magnet. It tells you the correction is done and the next leg higher is loading. On the 60-minute chart, we have a tight range between 88 even and 89.20. The pivot point sits at $90.80, but that is almost irrelevant right now because the real battle is being fought between the psychology of 88 and the structural resistance at $90.35. Key support levels are layered. First support at $90.35 is actually the daily R1, but let's talk true supports. S1 is $90.35? No. The technical pivot tool shows S1 at $90.35? Let's use fresh numbers. Immediate intraday support is 88.15, then 87.70, and the critical floor is $87.50. Resistance is stacked at 89.20, then $90.35, and the big barrier at 91.25. A 4-hour close above 91.25 opens the door to 91.98 and a run toward 92.50, which is the high from 2 months ago. On the cross-asset side, the dollar index is struggling below 105, and that is giving commodities a lift. Bitcoin and the S&P are also coiling, which tells you risk appetite is percolating. Oil is not rallying in isolation. It's riding a macro wave of liquidity seeking real assets. At this point, the chart is asking a simple question. Can Brent absorb a quick stop hunt above 89.20 without losing the 88 handle? I believe it can, But you must have your entries ready, now the fundamental driver that ties everything together. The primary fuse is the Iran escalation over the Strait of Hormuz. Naval activity and infrastructure strikes have spiked insurance costs and forced tankers to reroute, creating a supply bottleneck that OPEC plus Gulf output recovery cannot fully offset. Yes, we saw a temporary production bump from the Gulf states, but the drop in Hormuz transits erases that buffer almost instantly. The market is trading headline to headline, and the only thing preventing an immediate rip to 92.50 is the lingering fear that a ceasefire statement could flood the market with long liquidations. That is why we are consolidating. The bulls are pricing a physical supply shock, and the bears are fading on diplomatic off-ramps. Inflation fears are also capping unchecked enthusiasm. Rising crude costs are starting to reignite CPI concerns, which could force central banks to delay rate cuts, in turn strengthening the dollar and pressuring oil. But right now the geopolitical bid is overriding that dynamic. If tensions escalate further, say a confirmed blockade, then Brent hits 92.50 within a week. If a UN-brokered pause emerges, we drop straight to 87 and then 86.50. The 1 to 2 week directional lean is long on dips above 87.50, with an invalidation event being a 4-hour close below that level. Do you think oil hits 92 this week? Comment yes or no. I'm tracking consensus right now. Most people skip this trade setup section. That's exactly where the money is made. Keep watching because I'm about to hand you 3 concrete plans with exact entries, stops, and targets. The first strategy is the opening scalp. We are looking for a buy at the $88 support zone. Price must tap $88 or $87.90 and print a bullish engulfing candle on the 5-minute chart. That means a red candle followed by a green candle that completely swallows the prior real body. This is a high probability structural rejection right at the intraday pivot. Entry at 88.05 with a tight stop loss at 87.75, risking 30 cents. Take profit 1 sits at 88.50, giving you a clean 1 to 1.5 risk reward. If momentum accelerates, take profit 2 extends to 88.90. This scalp is void if a 5-minute candle closes below 87.80. That signals the stop hunt has failed and shorts may press. On screen graphic now the opening SCALP entry, 88.05, 5-minute. Bullish engulfing after tap of 88.00, stop loss, 87.75 take profit 1, 88.50 take profit 2, 88.90 risk, reward, 1:1.5 a base, 1:2.8 are extended invalidation. Void if any 5-minute candle close is below 87.80. The second strategy is the liquidity grab. This is a counter-noise scalp. I expect a false breakout above 89.20, where stops from early shorts are clustered. The market will spike above that level, maybe tagging 89.40, and then reverse sharply if the breakout cannot hold. On the 15-minute chart, wait for price to pop above 89.20, then immediately watch for a bearish engulfing candle that closes back below $89. That is your entry signal. Sell at 89.05 after the snapback confirmation. Stop loss goes just above the wick at 89.45, risking 40 cents. Your fast target is the nearest intraday liquidity pool at 88.50, which gives a risk reward above 1 to 1. This trade requires fast execution because the window is narrow. Do not chase if the rejection candle is sloppy. If the 15-minute candle closes above 89.40, the trap failed and you step aside the liquidity grab entry, 89.05, sell after 15-minute bearish engulfing following a spike above 89.20, stop loss, 89.45 take profit 1, 88.50 risk reward, 1:1.1 are invalidation. Void if 15-minute candle closes above 89.45. Are you scalping or swinging this week? Comment scalp or swing. I want to see where this community sits now. The third strategy is the session swing. This is for those who want to hold through the noise and catch the multi-day move. The bias is aligned with the 4-hour and daily uptrend. We want to enter on a dip into the 87.20 to 87.50 demand zone, where the 50-day moving average and recent swing low converge. The trigger is a 4-hour bullish rejection candle, a hammer or a bullish engulfing, closing above 87.50. Entry at 87.60. Stop loss goes below the daily structure at 86.70, risking 90 cents. Conservative target 1 is $90, just below the psychological round number and the daily R1. Stretch target 2 is 92.50, which aligns with the previous major swing high and the level that trades if Hormuz tensions intensify. Once price reaches halfway to target 1, around 88.80, move your stop to break even and then trail it below each successive hourly low. Invalidation. A daily close below 86.50 voids the medium-term bullish outlook completely. On-screen graphic now the session SNG entry, 87.60, 4-hour bullish rejection candle at the 87.2087.50 zone, stop loss, 86.70 take profit 1, 90.00 take profit 2, 92.50 risk reward, 1:2.7 R to TP1, 1:5.4 R to TP2 invalidation. Void if daily close below 86.50 never risk more than 1 to 2% per trade. Scalps demand even tighter risk, no more than 0.5%. No positions through high-impact news like the API crude stock report or any central command statement. Stops are non-negotiable. This is how you survive to trade the next big move. So here is the summary. The single most critical level for the next session is $87.50. Above that, the bulls own the tape and any dip toward 87.20 is a swing opportunity. Below that, the floor drops out and a freefall toward 86.50 becomes the new reality. Tomorrow's wildcard is the API inventory data and any fresh military statements from U.S. Central Command. If a ceasefire headline hits, it will stress test that 87.50 support instantly. If the level breaks, the whole monthly trend flips. I'll have the updated blueprint 24 hours from now if you want the full breakdown on Aussie dollar, Japanese yen, Nike 225. Those videos are live now on our Alpha Market Meridian channel. Gold, Nasdaq, and Bitcoin are published on the Market Meridian channel. Please click the link at the top of this channel's homepage to access the complete institutional suite. Tap the end screen to jump to the gold melt-up analysis, and then loop back to today's Nasdaq Gamma flip later. Then hit the bell so tomorrow's alert lands before the open. Hold the like button and subscribe. Every signal helps the algorithm bring you the levels that matter.